Hey, welcome back to the Junius Malpe channel. Thanks for joining us. Not a whole lot going on today in the news because it's some sort of a holiday and they're not trading over there on Wall Street. I believe the rest of the world is engaged in trading at this time, but we're seeing some headlines percolate to the surface. I was just doing some reading and looking around when I noticed a theme here regarding news on the US dollar, and it seems like some of the mainstream media is just now realizing the dollar has been in sort of a decline lately. And you can see a couple of headlines here why the US dollar isn't so mighty anymore. As you know, some people used to refer to it as the mighty dollar. That's from CNN, and we'll take a closer look at that article. Here's another one from Quartz. The dollar is languishing at its lowest level in 3 years. It's 8 hours ago. And then you've got Yahoo Finance saying dollars fall, weighs on global stocks as U.S. shut for holiday. Let's take a look at a one-year chart of the dollar. What direction is it going? As you can see, last January it was just a tad below 102 basis points. And ever since then, it's been sort of in a series of declines, bottoming out there, it looks like, in September, and then gaining some ground from September till about November, where it began its decline again, now reaching its lowest level in 3 years. I believe at one point it did dip below 90 basis points again. So there you can see it in that constant decline and a precipitous fall beginning right about January, the month we are in currently. Let's entertain the buffoons over at Fake News CNN. Why the US dollar isn't so mighty anymore. Let's see what they have to say about the US dollar being not so mighty anymore. Being that this is where a majority of the window liquor Americans will get their news from, we might as well see what they're being told. It's been a tough start to 2018 for the greenback. The US dollar has already lost nearly 2%. Oh my goodness. 2% of its value against other currencies, and is trading at its lowest level in more than 3 years. This follows a 10% decline for the dollar in 2017. 10% decline, ladies and gentlemen. They must not really care about the 98% decline it had ever since 1933 till now. So you don't see much headlines regarding that from CNN. They must not care. What's going on? At first blush, the drop is a bit of a mystery. Not really. Not if you're tuned in here, because the Federal Reserve has been raising interest rates for the past year. These people are completely disconnected from reality. Rate hikes usually boost the dollar's value because they cause more foreign investors to buy American assets. They also help keep inflation in check. Well, maybe foreign investors no longer want to hold the US dollar. Has that thought crossed anyone's mind? The U.S. economy has enjoyed 2 consecutive quarters of solid growth as well, and strong holiday sales suggest that trend continued at the end of the year. Many experts are predicting even more momentum for the economy from the recent tax cuts. I wonder if those are the same experts that failed to identify and predict the 2008-09 financial collapse, if they were the same experts that were quoted as saying everything was sound, everything is fine, there is no emergency here. I always find it funny when the news quotes experts. Like, who are they? Where are they? Is there a room somewhere? Is there a badge you get or a certificate? Is there a box of cereal that comes with an expert badge in there? Or do you have to stay at a Holiday Inn Express? What school do you go to get the degree of expert? Hi, I've got a PhD in expert. Real quick chart here from iknow.com. We got crude oil up, gold up, euro up, dollar down. And there you can see crude oil and gold, of course, reacting to a decline in the U.S. dollar, as would be expected. You know, there are times where they operate differently. However, it's quite routine for the dollar to go on a decline and then oil and gold to pop. We're looking at gold at $13.40. I've got a friend who is convinced we are going to see $2,000 gold in 2018. Thinks we're going to test those previous highs. He studies charts, he studies commodities, he studies oil. I don't know, he could be right. I could agree with the guy. I'm not going to say that it can't happen. I just tend to be a little bit more pessimistic these days. However, I do know the overall trajectory of gold, where it's going to go in the long term, over decades. However, is it going to hit $2,000 this year? It could. It could defy the experts. And it'll carry silver with it, I'm sure. Silver's going to rally with it. Silver, we're going to take a look at a chart here in a minute. And I think there's a tremendous upside for silver this year as well. I know in the past I've said I don't think silver is going to perform as well as gold. I think it's going to perform, but I still believe gold will outperform it going forward. Now here's a silver chart dating back to before the year 2000, coming into this year. And you can see there the large spike we experienced around 2011, the declines following, and then it kind of just consolidating and stabilizing down here around that $16 range that we've been so familiar with. And we've recently breached that 17 mark, which is a good thing, and then it retreated below, hitting around 16.91 currently on the world markets. You know, some would say that it's actually setting up a little flag there if you eliminate those peak highs, those huge parabolic inclines that we saw. If you look at the overall averages of the lows and the more normal peaks that you see there, it could be on an overall incline, and I would agree that we could see it breach $20 an ounce this year. You know, it's not a significant jump, but it's definitely higher than 16. We'll just have to see. We're going to have to wait and be patient and look at what takes place on the world economic stage, which I think could play favorably into the price of silver as well as gold. So let's look at the gold chart now. There you can see gold cocked, locked, and ready to rock. It's that ever since that low in 2016, we can see that it's just got a nice angle up, and it's got a trajectory that I think would lead it to some new highs, possibly, definitely breaching the 1350 range soon. And if we break that, as we've read and seen by some experts, again, gold has their own experts and silver experts out there. You see them also quoted. We have read a few, and there has been a conclusion that if it breaches certain levels, that it's got momentum to carry it forward to other highs as well. And I believe one of them we quoted last week in discussing this very topic was 1750, if I wasn't mistaken. That was one of the experts who said 1750, once it breaches the 1350 range, 1750 is fair game. Who knows? I'm not an expert. No, I'm not an expert at anything, except maybe certain aspects of gardening and other skill sets that I won't go into here on the Junius Maltby channel today. However, looking at gold, I think it's a healthy place to be, as always. You know, parking my wealth there. Always do it with a sense of confidence. It's not going to write me a check. I'm not going to get dividends from it. I don't plan on getting 58,000% crypto gains with it. I don't plan on it shedding 50% of its value the next day either. It's a nice peace of mind when you're holding some solid asset, liquid asset, and the most indestructible form of credit on the planet, and the best extinguisher of debt that there has ever been. So there it is. Nice gold chart going forward. I think we're going to be looking at nice solid at least 10% for the year. At least. Minimum. That's what gold does. 9-10%. And I think we're going to see that. Check out this chart from our friends over at Bullion Vault. Gold just kept on paying no matter how late into the crisis you bought. This is just from 2007, 08, 09, 10, and 11. And you can see that the top performing asset groups there and commodities and so forth. And you've got in 07 gold being number one, 31.59% for 07. In 2008, it was number two, 3.41%. 09, 27.63%. You've got it just under non-U.S. stocks, so foreign holdings. And then you've got, again, 2010, gold as number one. 2011, gold as number two. So first and second place for all 5 of those years spanning the economic crisis. And there are a couple of down years in there. You've seen the charts on this channel, a couple of years where it declined here and there. But overall, it has far more winning years than down years. And the one thing you have to look at, when I have this conversation with friends, it's sometimes difficult if they don't have a firm grasp on the overall historical picture of gold. A lot of people don't know that from 1933 to 1974, you couldn't really physically own gold bullion and invest in it as a U.S. citizen. So there's kind of a dark ages there, a period where you can't use it as information. It's baseless. There was no free market. There was no allowable investment. There was also different laws globally that affected gold at that same time. So we can only really look at gold in today's environment as being around 38 years old, or whatever it is, till 1974. So do the math. Going back to 74 till now. You can't talk about it in the 30s, 40s, 50s, or 60s. You cannot talk about it as if it was an old, archaic, barbarous relic. It essentially was brand new to people. It's almost like, pardon my French here, Bitcoin. It was something that was just immediately thrust onto the scene. 1974, boom, you could buy Krugerrands, you could buy gold, you could as an investor, allocate towards it. But it was also tied up and held back by a lot of legislation, tax laws, and other government interventions regarding it. So it's not like its own being. It's not allowed to operate in a free market sense as it should. It's got a lot of punishment, a lot of rules surrounding it, just a lot of things that tie it back from being able to fulfill its destiny, if you will. But you must understand that gold is not something, when we're buying it and when you're holding it, yes, it's been money for 65 centuries. But there was a period where, boom, it was stopped. It had that stability and value for 1,000 years. And then all of a sudden, the great Western governments of ours said, nope, you can't own it. Give it back. They rounded it up, essentially at gunpoint, put it on trains, melted it down, put it in vaults. You know the story. We've covered it here. You can go back and watch that in the archives of FDR banning gold and all of that such. However, all we can look at in today's time frame is the modern era. Where is gold now? How is it treated now? How is it performing now? Now we have fiat currencies, unbacked currencies, quantitative easing, the whole combination of not only fractional reserve banking, but you've got bailouts, derivatives markets, this gigantic economic monstrosity that's going to culminate in a disaster. We know that. And we've got inflation and suppression of inflation numbers, suppression of gold prices and silver prices, manipulations, shortings. There's so much that ties into this. It's really hard to make our way through the weeds and the fog of war, if you will, the fog of economic war that we are in. And aside from all the BS, all the smoke and mirrors, all the propaganda, the fact is, the truth is there, and we know what it is. If you know the truth, you know that gold is money, and it's going to maintain value over time, stability, value, purchasing power. That's it. It's really simple, really. It is. And a lot of people just don't understand it. They can't. Oh, I love to hear the argument. We're going to go off on a sidetrack here. But, if you bought gold in 1981, you lost your shorts, or whatever the year was. They talk about the spikes back then. It's like, yeah. If you bought it that day, there's a lot of guys. I know people who had purchased gold at $40 an ounce, $42 an ounce. So there you go. And I've actually read one phenomenal economist. I don't remember his name. He wrote an article several years ago that I remember reading. And he was buying sovereigns at, under $42 an ounce or whatever at the time. I think it was incredible writing, but it was all about gold over time. And then you always hear the thing, if you'd taken that money and put it into the Dow or the NASDAQ, the S&P. There's always the shoulda, woulda, couldas, and the if you did this and if you did that. Yeah, there's so many if you did this and if you did that. Your head can spin, If I had 6 cents and I'd put that 6 cents into Bitcoin, every time someone mentioned that back in 2009, I'd be a quadrillionaire at this point in time. So it's dumb. When you say you should have done this or you could have done this, hindsight's 20/20. Goober. So the one thing you can bet on is precious metals will hold their value in the future. That's it. Yeah. You can gamble with crypto. I know some people are. I know myself. I've allocated a little bit of my Steemit dollars that I've gotten for free in writing Steemit articles into the crypto sphere, and a little bit of other money in purchasing some Ripple, and that's fine. However, long term, big picture, going forward, gold's not going anywhere. Just like banks aren't going anywhere, and just like government is not going anywhere. So you can count on all of that existing in the future. Just like if there's an economic apocalypse, and the entire world is wiped out and we're covered in nuclear ash, there's going to be cockroaches, share, and Twinkies. That's it. Those are the only three things that will exist on the planet at that time. And gold, of course. So there you go. Thanks for tuning in. Junius Maltby Channel signing out. Don't forget to like, share, and subscribe, and participate in the comments.